Welcome to Creating Wealth with Jason Hartman. During this program, Jason is going to tell you some really exciting things that you probably haven't thought of before and a new slant on investing. Fresh new approaches to America's best investment that will enable you to create more wealth and happiness than you ever thought possible. Jason is a genuine, self-made multimillionaire who not only talks the talk, but walks the walk. He's been a successful investor for 20 years and currently owns properties in 11 states and 17 cities. This program will help you follow in Jason's footsteps on the road to financial freedom. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to the Creating Wealth Show. This is episode number 174, and this is your host, Jason Hartman. Thanks so much for joining me today. Today, we are going to talk with the two founders of the National Inflation Association. I think you'll find this interview very interesting, and we're going to talk about monetary policy and all that good stuff that we haven't really talked about too much lately, some big predictions for the future and how they impact you, and remember our philosophy, which is really the ultimate investing equation. What is that? Well, I'm not going to go into it in depth here because we have on prior shows, but just think about it. You want to acquire as much in the way of packaged commodities as possible. What are packaged commodities? Well, I like them in the form of houses, fourplexes, apartment buildings, etc., etc. All of those building materials, lumber, labor, concrete, glass, steel, copper wire, tons and tons of petroleum products. All of these commodities packaged and assembled together that you're basically buying most of the time at half price today. Isn't that unbelievable? And then you add to it a 30-year or maybe even a 40-year, a 4-decade-long fixed-rate mortgage. And then you see inflation coming along in the future. It may be in 2012. It may be in 2015. Nobody knows exactly when or how much, but we all know it's coming. And you pay that debt back in cheaper dollars. Those commodities rise in value. The thing I know is that every human being on earth has 3 common needs. What are they? Food, clothing, and shelter. And let them rent that shelter from you. The population is increasing in the United States dramatically. We're going to add an extra 100 million people in this country in the next 31 years. The global population in just 39 short years will increase by 50%. Think about the significance. None of this has ever happened before in world history. We will have almost 10 billion people on this planet in the not-too-distant future. In fact, that'll be just after a mortgage you might take out today would be repaid. The population will increase by 50%. In the United States, over 100 million people before you make the last payment on a mortgage you might acquire today. That has never happened before in human history. Population increasing, commodities, very bullish on commodities long term, and paying your debt back in cheaper dollars. That is the ultimate investing equation. I've said it many other ways before. Let's listen to the interview. Before we do that, a couple quick announcements. July 31st, Creating Wealth in Today's Economy here in Orange County. We'd love to have you at that event. The Masters Weekend in October. Some great products on our website. Last issue, show number 173, was a free sample of the audio version of the Financial Freedom Report, Financial Self-Defense in Uncertain Times. We'd love to have you in our subscriber family. Go to jasonhartman.com for that. And right after this, in just less than 60 seconds, we'll be back with the interview regarding the National Inflation Association.
Now's your opportunity to get the Financial Freedom Report. The Financial Freedom Report provides financial self-defense in uncertain times, and it's your source for innovative, forward-thinking investment property strategies and advice. Get your newsletter subscription today. You get a digital download and even more. The price only $197. Go to jasonhartman.com to get yours today.
It is my great pleasure to have the NIA on the phone today for an interview with us, and we have Daniel and Gerard, and NIA stands for the National Inflation Association. I have been following their work for a while now. They produce some fantastic videos and a new documentary entitled Meltup, and these guys have some really interesting insights into what is going on and really the scam that is being played, I'll call it that, that's not their words, it's mine, at the highest levels of our financial system and how we can all best deal with it. Welcome, guys. It's great to have you.
Hey, it's our pleasure. Thank you for having us.
My pleasure. Gerard, maybe I'll start with you and just get a little background as to what NIA is and why you started it.
Basically, NIA is the National Inflation Association, and it's an organization that we created basically because we were tired of all the propaganda that was being put out by the mainstream media. We felt that there wasn't enough places for the people to go and get the facts about the economy and why they should be preparing for hyperinflation, and we're basically dedicated to preparing Americans for that hyperinflation and helping them not only survive but prosper from it.
Excellent. Well, that is a very noble mission, and I'm right with you there. So, Daniel, what are your predictions for the future? I mean, obviously you guys believe there will be a hyperinflationary future, and what does that look like?
Well, you know, we're looking at literally a depression in the United States, but it's going to be combined with inflation because we have all the statistics looking at baby boomer data, looking at peak spending for consumers. All of this is pointing towards a huge contraction in not only spending but revenues for the government. But at the same point in time, we also will have the same projections for a huge increase in spending. So at the same time, they're decreasing their revenue and taxes, as well as the local stores are decreasing their revenues and contracting and closing stores. We're going to be matching everything that closes, everything that you look at would be vanishing in a depression-like situation. They're going to be replacing it with more debt, with more printing of money, because they don't have a choice, because they have an aging baby boomer generation that is, yes, they're going to be spending less in their older years, but the way our entitlement system is built, we are going to be spending even more on entitlements. For example, during the 90s, we had roughly 500,000 people a year enrolling on Social Security. And basically from this day forward, it's going to be roughly between 1.5 million to 2 million a year. So as you can see, the situation, the storm we're going into is not only a depression here in the United States, but it is a highly inflationary situation where the government has forced inflationary policies.
I would agree with you. The thing is that if we parse up what you just said, it's kind of interesting because a lot of the stuff you said would really make one think potentially that we have a deflationary future. I mean, think about it. If we have a contraction in the economy, if we have store closings, all of that adds up to just sort of a smaller economy with less demand, less capacity utilization, and that would indicate deflation on one hand. Why do you say we'll have inflation, though? I mean, certainly money printing is inflationary.
Well, the biggest difference is this will be the first downturn, global downturn in world history, where there is not one single currency that is connected to a precious metal, not connected to gold, not connected to silver, not connected to any commodity. So when you look at, Economics 101, yes, it spells deflation, but you have to remember, all the books in history have a currency that is backed by gold. So when you look at the Great Depression, we still had a currency that was backed by gold.
Right.
So trying to compare the Great Depression in the 30s and the Great Depression from 2010 to the early 20s, it's really comparing apples to watermelons, because this time you have to look at the currency situation. It dramatically changes everything.
That's a very, very good point. I mean, every currency in the world is now a fiat currency. And so there we really get to this sort of race to the bottom phenomenon where all of them will potentially become worth their intrinsic value, paper and ink. But maybe the U.S. is the better of the lousy currencies. I mean, we're certainly seeing that right now with what's going on in Europe, where the euro, once thought to be the sort of star of the show just a couple of years ago, is now looking like a real disaster, huh?
Yeah, exactly, and it's very deceiving because people will follow the dollar index. What it is it's illusions priced against other illusions. And that's why the National Inflation Association, part of their 2010 predictions list, was really to have people start focusing on the Dow priced in gold. And as you can see, the Dow and most things relative to gold are actually seeing a contraction in their price relative to gold. So if you look at the Dow Jones, it was roughly over 40 ounces of gold in 2000. Today it's just hovering right around just over 7.5, just under 8.5, kind of bouncing around there. But so if you look at the Dow Jones, I mean, you're not really gaining any value. All you're doing is you're seeing the result of inflation. And, of course, this is what the documentary Meltup shows with overwhelming evidence.
Yeah, and by the way, you guys did a fantastic job on Meltup. I really got to say I'm impressed. And you had over 500,000 views of that, right?
Yeah, in just 3 weeks.
Fantastic, Gerard. That's really good work. We look at this $60+ trillion time bomb of entitlement liability hanging over our heads. This has never happened before in world history. We have aging baby boomers. We have Gen X, my generation, that is much smaller, coming behind them, and then Gen Y coming up after that. And yet, at the same time, we have a reasonable-sized chorus of people out there saying that the future is deflationary. I don't agree with them, but I'd just like you to address what they say. And here's what I hear them say. I hear them say things like, there is so much deleveraging going on and so much more deleveraging to come. They quote numbers like $46 trillion in potential defaults coming up on various forms of debt. And they say things like, the government can't print enough money to create inflation. Well, that, to me, on its face, is a completely stupid statement, because the fact is there is no limit to the amount of money that can be created out of thin air. But what do you say to the deflationists out there? They are out there, and they say that everybody's talking about inflation, but they say the future is deflationary. And the first part of this downturn really was deflationary in many categories, wasn't it?
What you're looking at is the perceived value of a currency. And so right now, when things are kind of normal, the system is still, you could say, relatively intact, although it's being held together with simply nothing but print more money. It is the perceived value of the currency. And that is the biggest difference between the deflationists and the inflationists, because if you listen to basically our arguments, we're looking at the same facts, we're looking at the same statistics, and we pretty much agree all the way up until basically what is going to be the short-term result. Even if you talk to some of the biggest deflationists, even Harry Dent out there and Prechter, they will tell you that, yes, they believe in deflation. Of course, they're huge on deflation, but they also say, well, in about 10 years, though, we will experience huge hyperinflation. So the timing is really different. I think both camps do inevitably believe that it is going to be a dollar situation. And so really that's what separates us. But just getting back to the currency, the dollar is really, if you keep interest rates low and keep the quantitative easing, you're going to experience the results of hyperinflation because you are already doing it. If you raise interest rates, like everybody says it's just going to be so easy to do, I mean, let's be real. What would happen to the U.S. economy if interest rates went up 5%? I mean, we can barely sell homes by giving people $8,000 tax credits and having interest rates for the banks at 0%. If you raise interest rates, this economy will freeze up. And as it freezes up, just like the world is turning its back on Greece, they will look at the U.S. dollar as no longer a stable currency because the U.S. dollar is still backed by the U.S. economy and the perception that we can grow ourselves out of this. Once they see it freeze up because we raise the interest rates 2%, 3%, 5%, the world will know. They'll know that the United States is either going to have to print to devalue their currency to pay off their debts, or they're going to have to default. Either way, it equals people running from the U.S. currency, and investor demand for treasuries will collapse. It's already contracting. There's already some of our biggest treasury buyers are already contracting in their holdings. So we're already seeing the world look at the dollar not like they have ever in the last 30 years.
Right, and when those treasury auctions directly relate to mortgage rates, and that is why I agree that is absolutely impossible that we will not see higher mortgage interest rates in the future. We must see higher rates. There's no other way. Because
there's no doubt that we might see more mortgage defaults in the future and more forced liquidations on Wall Street, but that's not going to change the fact that the dollar would not be looked at as a safe haven, and that people need to position themselves into gold and silver, which are the only things that will provide protection from both a deteriorating economy and massive inflation.
So, very good point. So what's odd is I've had Harry Dent and Bob Prechter on my show before, and oddly enough, Bob Prechter is a very interesting guy, and so is Harry Dent, of course. He still kind of believes in the metals, it seems like. I mean, even though he's a deflationist, and he's got that big report he wrote on coping with deflation. It's sort of contradictory, if you ask me. And then Harry Dent said something that I just don't understand at all. He talks about the fact that young people are deflationary when they enter the economy, and he's referring to Gen Y, 80 million Gen Yers entering the economy and creating more innovation, and that being deflationary. Well, I guess it is from a technology standpoint, but food and energy and commodities are what we all really live on, not iPhones, although they're super cool, right? I just don't get it. It doesn't make sense to me.
Yeah, well, what he's basically reviewing is the fact that young people pay less in taxes and they make less money. People peak in income around 50 years old. They're peaking in spending around 46 to 48 because they've got these teenagers in the house eating everything. They've got to buy car insurance. They're paying for school loans. So I think that's what he's probably looking at. But see, we look at that and we put the math together and we go, wow, we're going to have less income and more entitlement spending, more spending. The spending doesn't contract. It doesn't matter. If you look at Republican, Democrat, it doesn't matter who's in the House, who's in the Senate, who's in the White House. We know one thing about this government. They spend, and if they don't have the money, they have no hesitation to borrow it. So we know the result of borrowing and the result of printing is economics 101, which is hyperinflationary.
Yeah, no question about it. What do you consider hyperinflationary? Is there a percentage number? Does that mean 20%, 50% per year? Does it mean Zimbabwe 10 zillion % per year? What does that mean?
Basically, when you're looking at hyperinflation, by definition, we are already in a situation where we are hyperinflating our currency. When you look at the M3, how it shot up over the last 2 years, people talk about, the M3 is down. Well,
they stopped reporting it.
From the moon, yeah. But, it's still really high. It's, the Federal Reserve has so many bad assets, has increased its books in the trillions. Look at the U.S. I mean, it took 40 presidents to hit $1 trillion of national debt. We just did $1 trillion in the last 7 months.
It's amazing.
So if you want to talk about hyperinflation, by definition, we are already hyperinflating our currency. We are just waiting for the result. As far as what kind of percentage are we going to see in prices, that's hard to say. For sure, in terms of dollars, I think you're going to see double, and certainly in need items, in the triple digits of price increases.
We already believe that the real rate of U.S. inflation is already around to be 5 to 6%. And there's no doubt that we're in a hyperinflationary period. It's just that we're waiting for the results of that to be, price inflation.
So what has to happen for this hyperinflation to occur? By the academic definition that Daniel was talking about, which is just really money creation, we're already there. But people haven't really noticed it yet. And I kind of like to say that we have inflation already, and everything that really matters and everything that's optional, we have deflation. But is it just a matter of that money trickling down from Wall Street and the banks? Are they just sort of hoarding that money and it hasn't hit the streets yet, if you will? What has to happen for people to really notice this in their daily life?
Well, the average American is already noticing because they're paying at the pump. Food prices, this is a statistic that's a month old now, but they were up 27% year to year. When you combine food and energy, up roughly 17% year to year. So the average person is already feeling this. And
food stamp. If I can interrupt you 1 second, Dan. I mean, even food stamp usage right now is at an all-time high, over 40 million. People are definitely seeing it.
40 million people on food stamps?
Yeah, it's at an all-time high. I think it just topped 40 million. I think it's 40.2 million.
The nanny state is here, isn't it? We are living in a socialist country. I mean, it's just, it's like everywhere you look, the government is shelling out money it doesn't have to buy votes. It's just amazing to me. Incredible.
I was at the grocery store today and with my wife, and, I don't know if anybody else has noticed, but I sure did. When you look at, the Dreyer's ice cream, they are smaller than they were last year.
Very good point.
They're the same price.
Yeah. Another form of inflation, just shrink the size, keep the price the same.
Absolutely.
Yeah.
That's a big thing, and you see it going on with Frito-Lay. Here in Southern California, there's no more 24 packs of soda. Now it's 20 packs of soda, but still the same price. So there's a lot of shadow inflation out there as well.
Yeah, that's a very good point. I know a lot of people don't really notice that. Packages are shrinking all over. I was out at dinner last night and I ordered a drink and I commented to the person I was with. I said, hey, this martini glass is actually smaller than it used to be. And I remember thinking before, this restaurant has very big, generous glasses, and the glasses are getting smaller. So you're absolutely right. No question about it. Stay tuned. We'll be back in less than 60 seconds.
Afraid you could lose your home? It's a real fear for millions of Americans. But there is hope with our Do-It-Yourself Loan Modification Report. Loan modifications are sponsored by the federal government and can be anything from a reduction of the principal balance to a lowering of the interest rate or an extension of the length of your mortgage. Unfortunately, negotiating a loan modification isn't easy. You'll find step-by-step expert advice in the Do-It-Yourself Loan Modification Report from JasonHartman.com.
Talk a little bit more, if you would, about the Dow-Gold ratio, because I think that is a very significant measuring stick. Gold is a reliable measuring stick, and the old joke is 2,000 years ago, you could have purchased a toga and a pair of sandals with 1 ounce of gold, and today you can buy a man's suit and a pair of shoes, and it's pretty darn consistent. And when you talk about the Dow-Gold ratio, Peter Schiff, about 2 years ago, had a very interesting interview, very telling, on CNBC with Mark Haynes, and he said that there has been no real appreciation in the value of the Dow since 1929. The returns have been dividends. That's it. Then he had this guy from B of A on, and you're probably familiar with this video. It's floating around, and he's trying to argue that the power of a processor is increased and all of the hedonic scams that they use to measure inflation and lie to us about it. But what else do people need to know about the Dow-Gold ratio? Talk to us a little bit more about that, because I think that is a very, very interesting metric that everybody should be looking at.
During gold's last bull market, we saw gold rise from $35 to over $850 for over a 2,000% gain. And from gold's low in 2001 of about $255 per ounce, we saw the same percentage gain in that bull market descended to over $6,000 per ounce back in 2001. The other way to look at it is with the Dow Jones and gold ratio, which in 1980 had bottomed at 1, meaning that the price of gold matched the Dow Jones. If we saw gold and the Dow Jones meet the medium current levels, we could see it rise to over $5,000 per ounce today.
That's incredible. We're in this huge mess of entitlement liability, and I've identified 6 ways that the government might get itself out of the mess, and I'd just like to run them by you guys and see what you think, if I may. The first one is that they could just default on the promises. This, of course, is way too harsh. It's politically unpopular. I don't think this is going to happen, but it may to a small extent, where they just say, hey, we can't pay the Medicare, we can't pay the Social Security, etc. Again, harsh, unpopular, unlikely. Number 2, raise taxes. Of course, they can't raise taxes enough to pay for this liability. It's so underwater. It's just not possible. But I think it'll be somewhat of a blend of all 6 of these things. Number 3 is have a yard sale. Sell off assets to raise money. A few years ago, we thought about selling the ports to Dubai. That was a big political football. The BLM sells off land. Now I guess we're considering selling military equipment to Muammar Gaddafi, our former enemy. Foreign countries own toll roads and so forth in the U.S. Number 4, the American military or the economic hitman. I had John Perkins on the show. I'm sure you know who he is. Really interesting guy. Just steal from other countries, steal their assets, their commodities. Number 5 would be good news, and that would be innovation, especially in the area of technology, energy, biotech, nanotech. That would be good news. But number 6, and most likely, and I think this is what you guys really agree with, is just simply inflate their way out of the debt. Huge inflation. They'll keep the promises in nominal dollars. Well, in real dollars, everybody just gets poorer and poorer, and our debtor countries, China namely, will get paid back in more and more worthless dollars. Any thoughts on those 6 ways out of the mess?
Looking at the list you just provided, certainly, of course, I agree with you. It's going to be default by devaluation. The government has no problem doing this. I mean, if you look at everyone runs around talking about our standard of living, how well it is compared to 20 years ago. Look, because of the results of all the money creation, all the borrowing, the borrowing from the future, the borrowed prosperity, here you have, it now takes 2 people to raise a family. It takes a credit card. It takes a home equity line of credit. I just talked to a couple a few days ago, and they told me how they were debt-free now because they had lumped every credit card and loan they have into their house. Okay, so people don't even understand the concept of really being debt-free anymore because they're just so used to this lifestyle. 20 years ago, it took a grocery clerk to raise a family of 3 or 4, and now it takes 2 people working full-time jobs. So the standard of living has deteriorated. When you look at seniors, they're absolutely being ripped off because as bad as it seems when you look at the debt for Social Security and the obligation for Social Security, it would be even worse if we just calculated inflation the same way we did 25, 30 years ago. According to John Williams from Shadow Stats, right now we're underpaying our senior citizens 43% because of all the different gimmicks that you'll see in Meltup that we do with inflation, how we calculate the CPI, which is how we give them their standard of living increase. So if you watch the movie Meltup, for those of you who've already seen it, you'll know that we're no longer measuring the cost of living. We're measuring the cost of survival.
Yeah, that's a great point, and you are so right about that, because with substitution and weighting and hedonics, and then just out-and-out stripping things out of the index, it's completely bogus, and the government has a huge incentive for misleading the public. Number one, to buy votes and make them think they're having a better life than they really are. But number two is all of the entitlements are indexed to the CPI, which is controlled by the government. So there's a huge motivation to mislead when it comes to this, no question about it. What do you think people should do? I mean, really, what is the strategy of NIA? And namely, what sectors do you think will see this hyperinflation? And this is in a good way for the investor. Obviously, you guys like precious metals, I think, right?
Absolutely.
Are there any other areas where you see big opportunity for investment?
Just so you know, we released a review on our website, a gold and silver bullion review, for those people who do want to invest into the gold or silver. Many websites out there, they actually sell the bullion right online. We've reviewed many of them, and you can visit our website for those reviews. But we've made the best investment of the next decade to be silver. We believe silver actually has more upside than gold. It's in history, it's always outperformed gold, and it's actually a lot cheaper than gold right now. A lot of people, we get a lot of questions and emails from our members that say, it's hard for them when the gold's, $1,200 an ounce, but you can actually invest into silver, and it's, below $20 an ounce still right now, and we feel there's a lot of upside potential there. But other than silver and gold, we do believe that agriculture, as we've seen food inflation, we believe agriculture is going to continue to rise, and we're very bullish in agriculture, as well as oil. We're getting ready to release our next stock suggestion, which will be an oil play. It's our first oil play, and we do believe oil has a lot of upside, especially to take advantage of the recent BP oil spill. Again, if you sign up to our newsletter, we consistently put out different suggestions in different companies. Not only do we suggest to invest into the bullion itself, but we also suggest to play the miners and the companies out there that are actually producing the gold and producing the silver and farming. And these are the companies that we believe actually even have more upside based on the market. So, again, sign up to the newsletter, and you can go to the website and see many of the stock suggestions that we've had. Almost all our stock suggestions have been up since we've released our website. So, definitely check it out.
Excellent. And, I'd have to say that as far as the metals go, and I'm not as much of a metals bug as you guys are, but as far as they go, I think you're absolutely right that silver is the play, because traditionally that silver-gold ratio, I think, has been about 17-1, and it's currently 68-1. So if that tradition holds or even comes anywhere near where it used to be, silver has a big upside. Absolutely agree with you there.
The American Silver Eagles that have been sold is also at an all-time high right now.
In terms of the number being sold, you mean?
Yes, the
yeah.
amount of purchases, yeah.
Right, yeah.
So there's not a lot of supply out there, compared to the demand. So there's definitely a lot of different characteristics out there that point to silver being a huge investment opportunity right now.
Mm-hmm. Yeah, and it's truly an industrial metal, whereas gold, it really isn't anymore. So I do want to run a couple things by you in terms of the metals. Look, I'm a metals investor, and I agree with you that it's not bad. I just kind of look at metals as the way to preserve your wealth. I don't really call them as much of an investment as many other people do, and I'll tell you why, and I'd just like to run this by you. They don't offer offer any financing or income or tax benefits. And if you're a little paranoid like I am, they're subject to confiscation potentially, and also subject to manipulation by central banks. And I think they're being largely manipulated now. And I know that you had a video on silver manipulation, and you were right about your prediction there. That was just about a month ago, I believe, which I found interesting. And, I agree that manipulation can never go on forever. But the question is, can it go on longer than any of us can wait? And there's that old joke about the markets, referring to the stock market, the markets are irrational. Well, yeah, you may be right, but the market can remain irrational longer than we can remain solvent. So I'm certainly think you probably agree that central banks are manipulating the prices of the metals, right?
Yeah, there's no doubt about it.
It's to our advantage. I mean, you don't want to buy something that's been manipulated up. You want to buy something that's being manipulated down. So when you buy silver for $18, send a thank you card over to JP Morgan, because
Yeah.
the reason why you can buy it for $18 and not pay north of $100, $200 for an ounce of silver. And as far as the metals not offering a dividend, specifically looking at what we believe, like Gerard said, was the investment of the decade, silver. If you're a technology investor or a commodity investor, I mean, silver is where you want to be, because silver, let's say you think cell phones are going to do really well, or you think China and Asia are going to industrialize. Well, that's what the play is.
Right.
Silver is in all these different components that we use every day. It's in computers, it's in cell phones, it's a catalyst for medicines, it's in the windows for skyscrapers. So if you believe Asia is going to continue to industrialize, we are using so much silver. And really the supply and demand situation is the most bullish factor for silver. If you look at 50 years ago, above ground available silver was 10 billion ounces. We have shrunk that within 50 years down to less than 1 billion ounces of above ground available silver.
That's amazing. It really is.
Yeah,
We've already started to see that their silver tighten up, and we definitely believe that there could be a major short squeeze in the near future. And that's why we try to expose it in Meltup, and we hope that many people out there see Meltup and can help spread the word. And the more that we expose it, I think the closer we'll become to seeing that squeeze.
Yeah, I agree with you. This is just such a big scam, and so few people are really aware of what is going on with the ultimate weapon against them, and that is the value of their currency. So in what form would you buy silver? Silver Eagles? Is that your favorite?
Personally, I don't think it matters. I personally just buy silver bullion or silver mining stocks. So, yeah. But one thing I can tell you what not to do is don't get into the collector value. Don't start paying $200 an ounce for a silver coin because it was on some ship. You want to buy the metal.
Right, the bullion.
In the first quarter of 2010, the U.S. Mint has already sold over 9 million American Silver Eagles, just so you know.
Incredible. So there hasn't been much talk about this, but I have read and heard a little bit about it. And that is the possibility that the COMEX exchange is a Ponzi scheme. And I tell you, if that is true, boy, we are in for a very rude awakening. A lot of people think they're investing in the metals because they own it in a fund, in an ETF, and that's really, to me, just another fiat currency. They're getting a piece of paper for their dollars, and they think it's a piece of metal, yet they're not taking delivery of it. So I like your system, which I think boils down to physical delivery and mining stocks. So if you're in the metal, you hold the metal. Have you heard anything about that in terms of the COMEX?
Yes, we have, and that's the main reason why we've said, I think there will come a time where people will call and ask for the physical silver, and we could see a COMEX default. We definitely suggest, like you said, to buy it yourself, hold on to it yourself. Many of those companies that sell it are on our website, and we definitely believe in a lot of the miners. Right now, there's a lot of silver miners out there that we are researching and that we've also suggested that are on our website that are significantly undervalued fundamentally. And, we definitely think there's a huge opportunity there. And, again, once that COMEX default happens and people call for their actual physical silver, we can see one of the biggest short squeezes that the world has ever seen.
Yeah, I tell you, if everybody asks and that run on the bank, if you will, on the COMEX ever occurs and people want to take delivery, I don't think they have all the metal there. I think that is a very strong possibility that is true. But again, there's no way for me to personally know. What do you think about the other metals? What do you think about copper, palladium, platinum? Do you guys have any thoughts about that, or are you just kind of all around silver?
Well, I personally would sound like a broken record because I don't buy the other metals as much because there's every argument you can make for platinum or copper. That same argument is there for silver, only times 100. It's just like the same argument you can make for gold. It's all there in silver, but it's not vice versa. I cannot make all the arguments that I have for silver for gold. I certainly can't make all the arguments I have for silver for copper and platinum. So when it comes to the smaller investor, I believe silver is, without a doubt, their best opportunity.
Okay, good. What would you like people to know and do? Just kind of summing this whole thing up. I mean, definitely people have got to see the documentary you've created, Meltup, which is great. I could highly recommend that myself. What else should people know? You know what I want to know? When? That's the million-dollar question everybody wants to know.
Well, right now, I mean, everybody really needs to start paying attention and educating themselves, and that's the main reason why we've created NIA, is to help educate people. And people need to get educated. People need to start spreading the words to their friends and family. People need to start watching documentaries like Meltup, and they really need to start looking at the facts and stop following the mainstream media. So, the first thing is basically I think people should go to inflation.us. They should sign up. They should sign up to many other publications out there and start following people that we also believe in, like Ron Paul, and we follow Peter Schiff and Jim Rogers, and obviously we've had an exclusive interview recently with Gerald Salenti, which was great.
Had him on the show too. He's great. Yeah,
he's great, and we suggest checking out the Trans Institute, and we definitely think that people need to start getting out of the U.S. dollar and positioning themselves into gold and silver and things that will preserve their purchasing power. But most importantly, we want people to start getting educated.
Very good advice. Well, thank you so much, gentlemen, for joining us today. Really appreciate it. And I want to just tell you, keep up the good work. Give out the website if you would.
www.inflation.us.
Inflation.us. Everybody go check that out. Daniel and Gerard, thank you for joining me today.
Thank you. Thank you for having us on.
Are you interested in a property outside of our network? Do you need a second opinion? No problem. Let Jason's experts evaluate the deal. For more information, go to jasonhartman.com now. Copyright the Hartman Media Company. For publication rights and interviews, please email media@jasonhartman.com. This show offers very general information concerning real estate for investment purposes. Opinions of guests are their own. Jason Hartman is acting as president of Platinum Properties Investor Network exclusively. Nothing contained herein should be considered personalized, personal, financial, investment, legal, or tax advice. Every investor's strategy and goals are unique. You should consult with a licensed real estate broker or agent or other licensed investment, tax, and/or legal advisor before relying on any information contained herein. Information is not guaranteed. Please call 714-820-4200 and visit www.jasonhartman.com for additional disclaimers, disclosures, and